So let's switch gears. You've been selling off vessels. I mean, people are afraid of the container markets ahead. Let's save that a bit, but why do you sell those ships right now? What is the thinking behind it?
Yes, I mean, first of all, I'm not completely concerned about the container market. To be frank, if you compare it with other sectors, it's still doing very, very well. Of course, supported by the Red Sea closure, but selling ships now, we have been on a path to renew the fleet for the last 2-3 years. This is part of our fleet renewal, and fleet renewal means you buy ships, you sell ships. We want to buy more efficient ships, be it eco ships, be it ships that we can properly retrofit, or be it new builds like the NCL Westland, which we are going to christen today. So for us, it's a continuous fleet renewal exercise, and one goal now is to also increase investment capacity because in uncertain times, the thing that you can control is your own balance sheet, meaning low leverage, high flexibility, and ideally enough cash to act on opportunities when they might arise, and also to weather any turbulences down the road, which you cannot rule out either, right? So in all fairness, the container market has some curveballs ahead, but so far it's keeping up quite nicely. But that's the reason why we have decided to sell a few ships, and I wouldn't rule out that we sell a few more, but we would also be on the buying side.
Makes sense. So last time we spoke, you said it's going to be a very hectic year. You had dry dock, you had retrofits. So some key highlights after having ships into dry dock. I know you invested in new technology, new innovations. Are there anything that you think is quite interesting ahead, like innovations put on existing ships to make them more efficient and stuff like that?
Absolutely. I think investing into the existing ships, I mean, you cannot just order new ships and solve the problem, right? I mean, it's a balancing act. And that's fleet renewal for us doesn't mean selling and buying modern ships. It means very much also investing in the existing ships. And last year we have done more than 20 retrofits, part of which were substantial. And with substantial, I mean bulbous bow, propeller, paint systems. So we have invested significant amount of money. Over the last 2 years, we actually committed $600 million into buying new ships, ordering new builds, or investing into existing tonnage. So that is a very important ingredient because the results are extremely good, I must say. We have up to 25% in fuel savings just from retrofits. So this is very significant, very sizable, and is also something that we do hand in hand with our chartering partners, actually.
So today is a big day, as we stated, but I think tomorrow it's a big day for the US administration. We have policies. I mean, there's a lot of debate. Is it just about negotiations? Is it actually been put into place? Chinese vessels is, of course, targeted here. How do you paint the picture on what's ahead? You're just going to analyze it and see what's happened, or do you see some very troubling stuff going on?
I mean, one thing is for certain, it will create disruption of global supply chains, and that is what will happen in any case. Now, will penalties or port costs or fines, will that be imposed? Time will tell. I wouldn't rule it out, but I would also not say it's guaranteed that it will happen. Looking at us, obviously we're looking at our fleet. We have around 25% of our fleet is, so 25% only is Chinese built, and of that only 4 ships actually go to the US. So we are not that much exposed, and in cases where you have a charterer and the owner, those fees are usually for the charterer, obviously, right? So it's port costs, so it's not with the owner. It will, however, create disruption. It will create a new pricing system. So it will not make life easier, to put it that way. And tariffs is another aspect, right? The moment consumption goes down, it's generally not good for container shipping. Having said that, shifting trading pattern, volumes going different directions, I think this will create disruption. And I think the biggest question for the container market is not the tariffs, in my view. It's the Red Sea situation, because that has, supported the market last year very, very strongly, is continuously supporting the market. So a lot of the let's say, future development of the container market is linked to that very external effect. And that's back to my point. What can we do? We can prepare ourselves for whatever is ahead, balance sheet management, being ready, and that's what we're doing.
Does that mean that, to calculate and forecasting, second and third order consequences is almost too hard of an exercise? So you control what you can control. And then, if you have a disruption, maybe the side effect or the second order consequence will be very hard to truly understand. So don't spend too much time. I mean,
it's impossible. Obviously, we are running many analysis. A lot of that is I would say in hindsight unnecessary, but it gives you a better feeling in taking decisions. And I think decision taking has to follow the route of, not overpacing at this point in time because of all the uncertainty, right? I mean, the last year's geopolitical disruption or uncertainty and turmoil has always supported logistics shipping, so car carriers and containers, to a lesser degree the other sectors. But that might not be there for eternity, right? So, I mean, we really need to make sure that we are prepared for whatever market is ahead, and that's the consequence.